So this is going to be a short video today. I just wanted to give you some criteria that you could use as a screen to find potentially good investments. Obviously, this doesn't do anything, but it's to find good businesses. The idea here is if you can find a good business, then all that's left is to do good valuation work, right? So this is a screen that I use in the universe of stocks, right? And it's looking for really good businesses. Usually these tend to be pretty overpriced because they're good businesses, right? But taking a peek at these every so often is a good opportunity to find companies that do really long-term compounding, right? I also tend to add one more criteria to this list. That criteria is the market cap of the company. I tend to try to look for smaller companies with these criteria because they're more likely to be priced at least fairly. But also, I'm looking for companies that have a long runway for growth as well. So the four criteria that I use, aside from market cap, is return on invested capital. I'm looking for that to be above 15% per year. Above 25% per year. 15% is like is good, but if you're finding one, if you're screening, look for 25%. If I can find a company that's doing around 15%, regardless, that's an investable company easily. But 25% is what I use for the screen. I'm looking for gross margins above 60%. This basically, what those two things say is that the company is very, very profitable and that they are returning a lot of money on their investments, right? I define invested capital as long-term debt plus equity, right? So take that for what it's worth. So that's invested capital. Returns on invested capital plus high gross margins. High returns on invested capital, high returns on gross margins imply the business has some sort of competitive edge, right? That they're able to make money and actually take that money that they've earned and transform it into additional earnings, right? So that's sort of the criteria there. The next thing is operating margin. This is how much money actually hits the bottom line. This is how much money you're making as an owner. So it's of every dollar that the business brings in revenue, how much money actually lands in your pocket as an owner after everything, taxes, everything, right? So or just before taxes, right? Because operating margin is EBIT, before you pay interest, before you pay taxes. I'm looking for that to be 25 cents. I want a quarter for every dollar that the business actually makes, right? After all of our expenses, how much money is left over? And that should be about 25 cents per dollar, right? So 25%. Again, this is a profitability thing. Is this business profitable? The next thing that I'm looking for is how much cash actually converts to free cash flow. So what this is it's net income divided by, or I do free cash flow divided by net income. It's how much of that net income actually gets pulled into the free cash flow, right? So the idea here is we want companies that are very, very free cash flow generative. And so what we're looking for a cash conversion. How much cash do you actually get from your income? We're looking for something that's above 100%. Why? Above 100%. Very, very quickly, it's because you're excluding things like depreciation, amortization, and those non-cash charges. All right, those are my 5 screening criteria. Take it for what it is. Until next time, stay rational.